Fauci, what are you doing? I thought you hung up on me last week. And besides, you got her, right? She's going to divorce me, right? She divorced you? Well, then who's she married to? Fauci? Fauci! Hey. Welcome back, everybody, to Markonomics presents Hoot Loot, the place where you come to be informed, be amused, but never be misled. What you saw at the top of the hour. Oh my God, well, my personal life is in a bear market, but let's forget about that. Let's go on to some really amazing information we're going to have for you today. I'm here in a sauna because partly to blend in the fact that we are overcooking and it is hot in here. It's got to be hot where you are. I'm going to tell you all about it in just a minute. Today's show is called Stocks Cling to Weakening Support. And we'll be right back here, by the way, right here to like and subscribe. And we'll be right back to tell you what the charts are telling us. All right, welcome back. I led off with this chart, which was actually someone else's production, and I think the credits are on here where it came from. But in any event, what it tells you, what it should tell you, because I'm not going to take it off until you've had a chance to digest it. Look at this chart. It says that lumber prices are up 400% year over year. Do you realize how much inflation that means? Jay Powell doesn't, because he thinks housing prices are only going up by 2% a year. That's the shelter part of this consumer price index. Yes, Jay, people do pay more than 2% a year in general. But I want you to take a look at this. Look at 2020, it starts to vault, and then all of a sudden in 2021, as they're spraying money around, look what happens. See, this is why this is the leading sign of something bad coming down the pike. I hate to say this, but it is. So hang on to your hats, all right? We're going to go, oops, we're going to go this guy. Everyone cares about Bitcoin. Oops, I'm sorry, I don't have good news here either, and I'm really sorry about that. But if you're playing this ball game, you know, and you're sophisticated, you take the lumps, the ups and down lumps, you have to take those. And, you know, just because the message does not, you know, conform to what you want, it's just a message from this, okay? And here we go. We have Bitcoin having broken down from an ascending wedge and a low, beneath a low and a high, beneath a high, a whole series of them now. This thing's in a downtrend. Now, does it have to go straight to 10,000 as we said last time? No, it doesn't. It could go down stair-stepping, or it could take a big plunge down 50%. Who knows? You just don't know right now. And that's the thing. A lot of people are just holding on to this, praying that this gambling vehicle is going to work out. Well, I'm sorry, but the market does not accommodate hope. It never does. Never did for me. I hope it would, but never do. Never get it. So the Dow Industrials look like they have broken down from an ascending wedge. Remember, we talked about how prevalent that pattern is. An ascending wedge is a big-time pattern. The Dow looks like it broke down, snapped back. We'll see. Still kind of creaking slowly but surely. Little pieces are falling apart. This is one of them. NASDAQ 100 kind of bumping its head on the top of its highs. Not really getting anywhere, but not really going down yet either. And what we're seeing is rotation in the group, and everybody's moving sideways for the minute. But we're going to identify where all of a sudden you're going to start understanding where this market is going to become a sell and exactly when you should be a seller in this market. S&P 500, if this was, like I said last time, if this is the only chart I looked at, I would think this was okay. I'd go, what's your problem with this? This looks perfectly fine. Well, yeah, it does until it doesn't. And, these stocks have a dividend yield that people buy them based on. Some do. And that dividend yield has to be competitive with interest rates, S&P 600 small cap, these guys are looking like they might be curling over in head and shoulders. Again, you look at the key support levels, and that's, breaching those is where we get a definitive signal. I'm just kind of hemming and hawing and, projecting and guessing and what the helling. But when it comes right down to it, there is a science here. I'm trying to get to the science part of it. And that's where these support resistance levels are the stairs, that you climb up, you climb down, you climb up. All of it starts to get very familiar in a pattern, and you'll start to see these. Okay? But that's no reason for you to not come back, Dow Jones Transportation Average. This one doesn't conform to the stair-stepping. It's something we're going to do shortly called the reverse wave. And this one is more of a reverse wave, but that's also a topping pattern. So I'll show you some individual companies. The dollar, this is something that we thought, for some reason might be doing well. No, this thing looks like it's barely holding on to support here. I would say that based on some of the evidence like lumber prices, that we are seeing a much lower dollar in our near future here coming up. And I think a lot more people are starting to get a hint about it as they see these anecdotal pieces coming around. First ports are clogged, then containers nowhere to be found, but money's everywhere, so much so that people don't want to work anymore. Oh gosh, and now your minimum wage is going to be too low pretty soon. Guess what? Because of inflation! And some congressman is going to say, $25 for minimum wage, me! Oh, I'm sorry, I'm preaching too much. Oh, I gotta, like, my shrink says, meditate more. I'm going to meditate. Whew. Okay, let's go on. CRB index of commodities. This is your burning embers of inflation here. This thing has been up 100% in a year. These are the basic commodities. So it's not just lumber. It's everything but gold and silver, basically. Crude oil, that's been part of it. It's up 700% year over year. And look at that. I'm not sure which kind of pattern it's in right now. My guess is that this thing could break up because of the fact that the dollar's going down. It's got to be priced higher. It's in limited supply. The dollar is not in limited supply. That's what you're now getting the sense of, that what happens when it's in an unlimited supply. Okay, all of a sudden, where does it have value? Where does it have meaning? I don't know. And that's what I'm wondering. Copper Miners ETF, copper prices are at a new high. And, this is, look at this, 600% in a year. So you don't find that, with this whole thing about lumber, is not just, it's part of all of these things are going up for home building prices and all that. They're squeezing people out of the market completely. Now interest rates are going up and the price of a house is going up. Oh yeah, more affordable by the minute. Agriculture, look at this. This thing's gone up like 18 days in a row or something at one point. Look at that. Food prices are skyrocketing. I know, Jay, I know you don't eat any food that doesn't get delivered to you, and that's when Janice stopped yelling at you. But I'll tell you this, around here, a Big Mac costs a lot more than it used to last year. Base metals fund, same kind of thing. Everything costs more, including tin, iron, steel. You name it, it's like one of the basic products. It's going to cost more. Palladium, look at that, off to the moon. And it is off to the moon. It's like one of the high-tech metals there is out there. So, of course, this is going to get a hell of a bid to it. And who knows, this thing's already much ahead of gold, which surprises the hell out of me. But it looks like it has a lot of industrial use. So we'll keep following this. And gold, here's the one that we mentioned. Gold, I've been pounding the table on this for years. So, shame on me. This has been my, this is where your emotions, and this is why we have to go, as I start talking about gold, I get too excited. Okay, so now that I'm centered, with gold, the thing is that I've always believed that it had intrinsic value relative to the dollar. The recent pattern of trading is showing me the opposite, that it has none. And I'm going, oh my gosh, if this thing does not hold that 1680 level, this thing will hit 1300, in my opinion. We'll see. I mean, I wouldn't bet on it either way, but it does not look good. Silver looks a little bit better. At least it's a sideways pattern. We're seeing a lot of that. But, for every step up, there's a step down. It doesn't really like to make that much progress. So we'll keep an eye on it. 10-year Treasury yields, now we've been in a consolidation. It could be a bull flag. It could be a continuation. We don't know. We don't have enough information yet. We're going to still follow it. But what we do know is it's got to cover inflation. If it doesn't cover inflation, it's going to be pushed up. It has to. So inflation is at the core of all of this. 30-year Treasury, same kind of pattern. We're seeing those, again, bull flag or ascending, ascending rounded top, not ascending, but a rounded top pattern that's actually a continuation. We'll see, yields, these yields are incredibly low long term. Apple weekly, again, Apple's now been consolidating for more than a year, which is why we went to a 5-year look. All right, now in 5 years, we see a little head and shoulders pattern there in the bear flag. And I'm telling you, this does not look good. This is not what you want to see. This is more likely to break down than break up. What would cause it to break up? Think about that. What is not known about this company at this point in time? Amazon going nowhere. Also, and that's another thing, is that so many of these companies are just, they're just churning around, and they're just kind of just wasting energy. Like I am in this horrible sauna where I'm sweating and feeling, ugh. Okay, yeah, I'm going to try to center here, so, you guys don't worry about my mental health. I almost watched a little bit of that cable news the other day, and, I was just flipping the channels, I was watching SVU Law and Order. Anyway, so okay, where were we? Amazon, right, Amazon. Okay, so now we're going to go on to Facebook, and Facebook is another one that has key support at 245. It still looks pretty good, but it may not have gotten anywhere. It looked like it broke out, and then all of a sudden it broke down. So, for right now, we don't have an opinion on it really, other than the fact that we'll just observe, call ourselves neutral. That's all you can do with that. On to Google, which also is a very interesting chart, which shows us the stair-stepping nature of a very healthy stock pattern and a very, very large market cap and multiple stock. This one is going to be affected, no doubt, by higher interest rates, but for now, it's looking beautiful to me. Lyft is kind of an interesting one. We've never actually had this one in here before, but again, what you'll notice is these horizontal red lines that I put in of resistance and support. These are like stair steps that they're likely to fall to, during their next journey downward or upward. In other words, these stocks all act like they're like someone walking upstairs. What you just don't know is how long the platform is, what shape it's going to be, where they're sort of just taking a rest. But they walk upstairs, they sort of like take a rest on the landing, walk upstairs again, or maybe they bolt upstairs. In some cases, bolt upstairs. I actually, come to think of it, in terms of Bitcoin, I can see why everybody's all excited about it. Anyway, Lyft is another one, very descriptive. You can actually see it, and I'm leaving it on here for a little bit longer than I normally do, intentionally, because it is so revealing of how the market actually looks. I mean, how you can make a picture out of a market, out of something that isn't alive. And I look at this thing and I just see amazing, amazing patterns here. And I hope you do too. And I hope that we're helping you get to see them and to make this all so, intuitive for you that you could almost do it in your sleep. Well, I hope you can't do it in your sleep, because then I'm out of a job. All right, so Microsoft, and by the way, I'm not worried that I'm out of a job, because I'm the one that hired me anyway. So, I'll just kiss up to the boss. I'll be just fine. So don't worry about that. Keep your emails and letters at home. Okay, so we're at Microsoft here. Looks really good again, and again, sort of stair-stepping its way up, and it's starting to look like, to me anyway, like it's starting to get tired. And how do I see that? Well, look at the stair steps. They're all smaller going up as they are coming up. And so you get a sense that there's actually a tired person in there. And instead of a person, imagine this being a market, a bunch of people acting tired. And now you've got a sense as to why this adds so much information. Tesla now, this I like to make fun of Elon a lot, but right now we're going to stick to the charts here. Again, there's another place that is logical for this stock to bounce to. That would be at 550 if it does actually break through the bear flag. But it's not just that. I mean, if it breaks through 650, 700, something like that, it will have been in a pattern of lower highs and lower lows, and it's not really looking that healthy from a purely chart point of view. All right, so the bank index we have in here, and the bank index it's bouncing off of its trend line, so that looks pretty good. No complaint there, and it's making a symmetrical triangle. No complaint there, but on the other hand, things are not looking so good for everything right now. With interest rates going up, it's like a whole new world in inflation. I don't think they know how to handle it, or to investors for that matter. They're just all pretending it's going to go away, I guess. Broker-dealer index, again, still tightening up in that ascending wedge, but not looking like it doesn't have a lot of upside and a whole lot of downside to go. We'll be following that too. Big oil, same kind of thing. Look at that. We see a sort of a rounded top above that red line where support and resistance is. On the way up, it's resistance. You have to break through it upside to actually be in a positive pattern. On the downside, it becomes support. So it becomes resistance and support at the same level, depending on which direction it's coming from. So in this case, it's now, support is at 550 or 950, and it was before resistance at that level. So, we keep an eye on it, and it looks like big oil is starting to not look very good here either. So, American Express, one of our credit card companies, a Dow component, ascending wedge broke down last week. This doesn't look good either. I got to tell you, this doesn't look good. Boeing, this thing broke out. it looked like really, really good. It broke out of a resistance level, and see, I tried to draw that in. Key support resistance 230. Okay, that's because you want to look at it as you're either going to bounce off of it or it's going to act as an overhead barrier to you. So you have to be depending on which direction you're coming from. So in this case with Boeing, it's pretty telling. It acts sort of as a center of gravity. Right there at about about 230, 235. It's like a center of gravity. It just goes like up and down around it. And so you kind of get a sense of this thing just acting around a center of gravity. Delta Airlines, talking about this one for a couple weeks anyway. Look at that. I mean, this thing head and shoulders, reports big losses, and it's got a $44 resistance support level. Right now, I would say that that would be the place where I would really, really turn and run and or be short or whatever. That's a very critical level right there. And I'm trying to draw these in addition to what's already been on the charts so that you see them as an addition to understanding the whole movement, the science of the movement as it proceeds. Oops. Okay, Discover Financial Services, credit card company, again in an ascending wedge. What's that all about? I don't like that. Again, prices are going up by that much, and they're not going to pay back your credit. Is that what we're understanding here, or what? I don't know. Disney also. There's another key support level at 180. So it's one thing to identify a chart as a rounded top. It's quite another thing to have the chart complete itself by breaking the support level. So that's why I've sort of added these on here so that you understand where it becomes effective. It's not just a theory. It's all of a sudden a reality instead of a theory. And it becomes a reality, to me at least, when it breaks the support levels. So that's why I'm showing you these exactly. Ford Motor, it looks like it has actually done that. But on the other hand, it broke up the other way. I wouldn't have followed it. It's not something I follow. But look at the ascending wedge in that. I mean, I do follow it, but not not religiously or anything like that. It's not something I trade in. But here again, you can kind of break down the pattern into a series of ascending wedges and a rounded top and a support level and a breakdown. It's uncanny, and that's what I'm trying to show you here is exactly how you just simplify it into these basic components. Well, I sit here and I am so sweaty. Oh God. Oh God, no wonder Ace doesn't want to have anything to do with me. All right, anyway, this is FedEx. All right, now FedEx is another one whose pattern is for months and months and months just sideways. It's just like that. Like remember, I am in a sauna for a reason here. I'm here because my shrink says I have high blood pressure. I need to calm down. Okay, so anyway, FedEx looks pretty dull to me. It's just kind of a sideways pattern, nothing much to say. And that's when the markets are saying a lot. They're saying boom. Okay, all right. General Motors, again, same thing. Look at all these lines and how they converge in a single place. It's really interesting. You don't actually set out to create this kind of science out of it. I never do, but then I always see something in it that I think is even new to me. Like I did this morning, I started seeing all these resistance levels, and I went, "Oh, that's interesting how that works." So stuff that I learned, is stuff that I want to bring to you. All right, so General Motors, look at those lines. So many lines, I don't even know what to say. All right, Goldman Sachs. Here's another one. Another one bites the dust, and another one's gone. And another. Oh, I'm sorry. That's Queen and Freddie Mercury. Goldman Sachs is sort of in a triangle, sort of breaking down. Key support. That's what you really got to watch. It's really when it starts breaking through all these centers of gravity that it has. And that's what I'm trying to estimate with the horizontal line. At what point, have you put more people underwater, by breaking down than you actually have people with a profit? So that's kind of another way of looking at it and what it really tends to mean. It tends to mean that everybody that transacted during that period where it was going sideways, they're down. Basically what that means. Every single person that bought, they're down unless they sold again. But anyway, so I'm having trouble here. Intel, we showed this one last week. Intel is the is a poster child of semiconductors. But I'll tell you this: it's broken down. It broke down out of ascending wedge. We were just showing that to you last Wednesday, as a matter of fact, that it was getting a lot of companies were starting to falter, and Intel was one of them. And again, look at where the the horizontal lines are, and the estimate I'm trying to make here is that there's a center of gravity. I mean, it's called support resistance. Walks up a stair, comes down a stair, and Intel just showed it perfectly. JP Morgan is actually more in a rounded top. The Dome of Doom, as I'm starting to want to call it. Dome of Doom. Maybe I should write that down. I'm going to write that down. Dome of Doom. What do you think? All right, never mind. So anyway, it has key support at 145. So JP Morgan also is starting to roll over and possibly break down, but we'll see. It needs to break the key support level to make it official. Nordstrom, and this is another one that we misestimated, but it keeps coming to key support at 34. So this thing keeps bouncing off of it and bouncing off of it and bouncing off of it, but it doesn't really make any forward room. So Nordstrom is one thing I would turn very negative on this one if it broke below its key support. There's really not much room there. The thing just skyrocketed. So all of a sudden you'll have all these people trapped up there, that Dome of Doom, with they won't own a thing. Or they'll own a loss is what they'll own. Okay, so this is Nike, and we saw again a breakdown from a flag. I know there's a lot of stuff on here, but if you actually sit here and look at the patterns and where all it's likely to bounce, it starts becoming a lot more. It starts coming alive. Okay, United Airlines, again, the airline business is kaput. Why is it kaput? Because the airlines themselves recognize what we all need to recognize, that business travel is never coming back the way it was before. There's something called Zoom. There's something called a virtual office. There is no way that we're going to get on a plane and go somewhere and see somebody. I mean, it's just not going to happen. So, I'm not an expert in what will happen, but I know something is going to change in a very big way. And they're not going to make money by playing the game they're used to playing, because the rules of the game have changed completely. So we'll keep up with that, but it's not a good message when somebody like United Airlines is losing this much money. And finally, we've got UPS, which is the the package carrier. Here's another one of where there's just been a sideways pattern, and it could theoretically become favorable or bullish above. I think we had it at 175 or something like that, which is it's above it now, and then 155. But if it breaks down below 175, it would be kind of neutral, and then at 155. You wouldn't want to see it break that, because you'd have all those people, going back to, 6, 7, 8 months last year that would suddenly be underwater. And that's why it changes the psychology so much, and why all these people are churning and churning and churning and churning. It's like I'm sitting here churning this horrible sauna, but we'll have some final words, and we'll be right back. This show is is Hoot Loot. Be informed. Be amused, but never be misled. Please like and subscribe. We'll be right back. Oh, welcome back, everybody. Boy, is it ever hot in the sauna. Oh, God, I don't know what I'm going to do. Oh, it's so hot.